The market continues to drop, and like most of you, I continue to invest on a weekly basis. Today I'm going to take a quick look at 4 stocks I'm keeping my eyes this week to kind of increase my overall position because I do believe they're sitting at attractive levels. And we're going to hit stocks in all different markets: cybersecurity, semiconductor, and advertisement. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. I do want to thank The Motley Fool for sponsoring this video. And make sure to check out fool.com/Jose to get the top 10 stocks to buy right now. All right, so the first stock we're going to take a quick look at is TSM, Taiwan Semiconductor Manufacturing. This is a company that manufactures chips for pretty much the whole semiconductor market. And this is one that I've been adding over time, but it's still a small position relative to my total portfolio. I want to say somewhere around 1 to 2%, and one I want to keep increasing over time. So this is why it's making the list again. So TSM right now, market cap of $443 billion. It does have a dividend yield of about 2%. So and we can see from its 52-week high, the stock I want to say is down over 35% at the moment. For those not familiar, TSM, they do report their monthly numbers, and their most recent April 2022 revenue was up 55% year over year. And for the full month of 2022 so far, so from January to April of 2022, and revenue is up 40% year over year. So in my opinion, semiconductor companies continue to do well. And the reason being, in their most recent earnings, they gave us great insight. High performance computing. This is things like cloud servers, by enterprise servers. So we're seeing huge spending by enterprises and cloud providers. That segment was up 26%. And I believe this was the first quarter where high performance computing made up more revenue than smartphones. The other market that's seeing strong growth right now is the automotive market, with things like autonomous driving. And that kind of autonomous technology will be used by other products like e-commerce delivery, food delivery, and so much more. So the first company is going to be TSM in that list, and one I want to increase my position dramatically. The second company we're going to take a quick look at, it's going to be a nice transition here, is Nvidia. This is actually one of my top positions. It's roughly over 10% of my portfolio right now. One I haven't added too much into because I do believe valuations have been quite high, and because it was already a big position. And that's probably my biggest deterrent right now, that it was already a big position in my portfolio. Now valuation has kind of decreased. Some people might consider it still high, and that might be true, but now it's getting comfortable where I don't mind adding into in forms of valuation, and I don't mind adding into even though it's already a big position in my portfolio. And the reason being is, look, the second biggest revenue market right now is data center, and is super close to the largest revenue segment, which is gaming. The second is they are kind of in the automotive market. And if we take a quick look at TSM, what are two of the biggest markets right now? HPC and automotive. So with those two markets being also in Nvidia's kind of revenue segments, it puts me in a bullish scenario for this company. And I want to say, many people probably don't believe or understand how early we still are in this kind of HPC market. This was a market that was almost non-existent a decade ago. For example, for the fiscal year of 2018, Nvidia only made about $2 billion in that market. Now fast forward to the fiscal year of 2022, they made about $10.6 billion. So you can see that huge growth of where this market is accelerating. Another thing, Nvidia is expected to announce their earnings on May 25th. So about a week from now, and make sure to stay tuned for the channel because I will be doing kind of analysis on their earnings. So Nvidia also makes the list. I do want to say one of the biggest risks right now happening is consumer spending. We did see kind of gaming market being their biggest portion. This is a heavily consumer market. Also things like crypto mining affects their revenue, and with crypto taking a hit, I do believe in this is more short-term noise, not long-term noise. And in the long term of things, Nvidia is still looking pretty great. So now the third company we're going to take a quick look at is one, I wouldn't say it's more of a valuation play. It's a big tech with huge growth opportunity, and that is Alphabet, right? Ticker GOOGL or GOOG. we can see from its 52-week high, the stock is down about 23%. And Google, I mean, this is Alphabet, a monster that is growing. Most recent revenue was up 23% year over year. One of the few ways that companies start to kind of cut down in expenses is through advertisement. So we can see that Alphabet might take a kind of short-term hit. Again, I do believe this is more of short-term noise. I do believe Google in the long term of things has numerous possibilities and continues to be a leader in the kind of advertising world. If we take a quick look at some kind of metrics for Google, Alphabet, EV to EBITDA ratio right now is sitting about 13.7. Some of the cheapest values we've seen since 2016. So it's telling me, hey, Jose, now it's looking pretty attractive. Same with price to free cash flow sitting at 22.47. Again, cheaper than it's been kind of since like 2017, 2018. So for me, Google is more of that, hey, you are a big company, plenty of cash flow, plenty of cash in their balance sheet, huge growth opportunity, and sitting at a great valuation to kind of maybe offset some of my other growth plays that I mentioned earlier on. Now, the last company I want to take a quick look at is one in the cybersecurity market. Again, another industry that I believe will continue to grow over time. So Crowdstrike right now, unfortunately, is down about 5% for the day. I hope it stays like this for a few more days until I purchase on Thursday or Friday. And we can see from its 52-week high, the stock is down over 49%. If we take a quick look at their kind of presentation, they showed huge strength. Their subscription annual recurring revenue continues to grow at about a 65% growth in their most recent quarter, which was, I believe, a few months ago. Their new earnings is expected for June 2nd, so about 2 weeks from now. We can also see they are seeing strong annual revenue growth as well, up 69% year over year. Their kind of dollar-based retention rate is above 120%, 123.9 in the most recent quarter. Huge numbers there. And if we take a quick look at the number, they sell like different subscriptions and different modules. So as a customer, you can either have one module or you can have multiple modules. I believe it's over 20 that they have right now, but over 69% of their total customers have 4 or more modules, which is impressive. Over 5 or more modules, 57%, and 34% of their total customers have 6 or more. So Crowdstrike right now might be one that might be sitting at somewhat heavy valuations in forms of forward price to sales ratio of 11.7. But this is a company, again, that is growing at crazy levels. We can see cash flow from operations trailing 12 months continue to go up, even though its valuation continues to go down. So 11.7 might be high for a lot of people, but I do believe this is one that will continue to grow because the cybersecurity market is still in early stages. So these are the 4 stocks on my watch list this week. Let me know what are some of the 4 on your watch list. Take care, have a good day, and see you next time.